Brotherhood Finance is officially back. Yes, fellas, I know it's been a while. I appreciate you stopping by Brotherhood Finance. It has been countless months since you have not seen activity from us. Well, I'm here to inform you that Brotherhood Finance is officially back. Yes, we're going to have YouTube videos, TikToks, and Instagrams out on a weekly basis. You can expect at least one YouTube video every 2 weeks from Brotherhood Finance, if not more, depending on how much interaction and positive feedback we get from starting back up on YouTube. But furthermore, our website is live still, TikTok is live, and Instagram is live, so make sure to check us out for that. And also, stay tuned for this end of this video. There is a lot of topics that really need to be addressed, need to be covered, and we're going to be diving into all of that today. The stock market, where is it at? Is there finally good deals in the market? Where do I think it's going? Cryptocurrency, Bitcoin dropped all the way down to what? $15,000, $16,000, around $18,000. Is it going to go up? Is it going to go down? What's my opinion on that? And real estate, interest rates are still climbing, hurting the economy very negatively in a negative aspect. Where do I think that's going? Are prices going up or down in the real estate market? When is a good time to buy? And much more. And not only that, but towards the end of this video, I will be covering 2 to 3 stocks that I think are great buys right now. So make sure to stay tuned for that. But furthermore, brothers, before we dive into this video, please smash the thumbs up button. It has been a while since I've said that. Please subscribe to our YouTube channel and leave a comment down below with our absence. What do you want me to cover? What do you want to know about? Leave a comment down below. Anyways, let's dive in this video. Much love as always. Let's get going right now, brothers. Now, first up, if you look at consumer price index for all urban consumers, you will see that obviously consumer price index is still going up, which is obviously showing that inflation is still high and it's starting to come down, but that is something that is troublesome. Now, U.S. consumers spending climbs again, but at the expense of savings. If you saw some of our prior videos, I was going into how millennials and people, they really just aren't saving enough money, and it's creating quite the difficulties and quite the problem, especially if obviously we were to slump into a bad recession. Still personally believe we are in one, but let's keep diving into this video before I address that. Now, Meta lays off more than 11,000 employees. Now, if you don't know what Meta is, obviously it's Facebook. They own Facebook, Instagram, and WhatsApp, which is also a way to communicate on Facebook. And they reduced their workforce by 13%. Now, the reason this is imperative is because you have some of the most profitable companies like Google, Amazon, and Facebook that are starting to lay off people, even with, a good net operating income and revenue on their balance sheet. They're foreseeing what's going to happen. As Grant Cardone always says, follow the money. And when you follow these big businesses, they're preparing for something. They're starting to lay off employees. They cannot, supply all of the additional workforce that they used to be able to, and they're foreseeing a bad catastrophic recession ahead. Now, furthermore, if we look at obviously where we are as far as the economy, you could see the last time we had such a large drop was in 2018, and then obviously in 2022, the markets also declined pretty negatively as well. Consumers spend an average of $133 more each month on subscriptions than they realize. Again, this is a problem because, again, it's drawing money out of their pockets. They're not having as much money to invest, and as we always talk about, you need to be able to earn, keep, and multiply your money. And U.S. commercial property prices slide 13% from peak as rates jump. Again, we kind of addressed this in a real estate video. We've had multitude of real estate videos. Obviously, the higher the interest rates climb, typically the lower the asset vehicle of real estate goes down. This is because, they kind of work in hand together, and you can't get as good of a deal with a higher interest rate, especially in commercial properties where you're using a lot of leverage to increase your return on investment, to be able to write off a lot of stuff, to get appreciation, tax write-offs, amortization, all of those great things that we really cover at Brotherhood Finance. And if you've watched this far throughout the video, I really appreciate it. Again, please make sure to smash the thumbs up button. We have a Discord down below. Have any questions? Check that out. All of our links to our social medias down below. It's all going to be active, starting effectively right now. Make sure to check us out. If you want to get more information and get started on your financial education and really invest while things are down and increase your return on investment, now is the time to do it. We are in a recession. We are in a crash. I think things are going to get a lot worse. Invest in your education. We have courses, stuff like that you can use. And there's a coupon code BCooper10 down below if you want to get started. Message us if you want to know more about it. Let's keep going on with this video. Again, 13% slide in U.S. commercial properties. Now, we have our U.S. national debt sitting around $31.5 trillion. Again, with a T trillion. Yes, it is quite substantial. Again, we have talked about this a multitude of times. Me and Cole did a podcast, which is the other CEO. We did a podcast about 8 months ago when we were talking about, the recession that's ahead. It's a podcast. We talk about all of this stuff. If you've not checked that out, definitely go and check out that video. Very informative, very insightful. Talks about, what we're doing, kind of gives us the insights. But they're going to have to raise the debt ceiling. I believe they already have. And this is just creating more money that is put into the marketplace. And obviously, the more they print, the more that hurts savers. As Robert Kiyosaki says, savers are losers and the rich invest in assets, which obviously is something we hit on as well. Now, if you don't know, Michael Burry, he says he sees the labor market developing and unskilled and semi-skilled remain in short supply. But white-collar workers, having proven the redundancy during COVID, will find gross excess in the labor market, pressuring wages at the end. So again, that's kind of his insight, where he sees things going. Michael Burry still thinks there's going to be possibly a wage price spiral. He believes that inflation is not done and that the crash is still further ahead, and we're just getting started. Now, cryptocurrency. We kind of talked about what are some indicators showing. We talked about consumer price index and national debt, how they're going to raise that, why it's imperative to really look at different asset vehicles to invest in crashes, because obviously the best time to get rich is during a crash. Now we need to talk about cryptocurrency. It's been quite a while since I've talked about cryptocurrency. Leave a comment if you want me to continue to address this, kind of show you my 3 or 4 that I really like, price targets I'm looking for, all those things. Just leave me a comment down below and I'll make a YouTube video on that. But some people are still saying they see Bitcoin at 50,000 to 100,000 in 2 to 3 years as the market hopes for a bull run. Now, something I want to add insight on, if you haven't watched our prior videos, is obviously crypto is a very speculative asset vehicle. When I mean speculative, I mean it's very volatile. It goes up and down very quickly. There is a lot of risk associated with it. Although I do see it like the internet of the 1980s. I do think it's going to be one of the best return on investment assets that you could really buy for the next 10 years. Although a lot of people are not good at holding, especially, people I talk to that are millennials or Gen Zers. They're not very good at buying an asset and holding it and writing it out. Unless that's your game plan for cryptocurrency, I would not advise to buy any right now. I still think there's going to be quite a substantial drop. Time will tell, but let's keep driving into crypto. Again, crypto-focused bank Silvergate reports Q4 loss of $1 billion. Obviously, you have all these banking corporations, all that stuff, kind of getting involved back into cryptocurrency. But the problem is the markets are going down, and as I just mentioned, cryptocurrency is volatile, it's speculative, and obviously you want to buy low and sell high, but there's still more pain ahead that I foresee personally. That is my personal opinion. But yeah, just keep that in mind as well. Obviously the banks, all the people that are getting involved. And Kevin O'Leary warns that another crypto meltdown 2.0 will 100% happen. I don't know. Do you agree with that? I don't know about that, but that's definitely insightful. And Bank of America says CBDCs are the future of money and payments. We are talking about Bank of America. This is not just a small bank. Again, central bank digital currencies, which is CBDCs, have the potential to revolutionize global financial systems, the report said. So if you sticked around this long, now let's dive into those stocks that I was talking about. So the first stock that I think is a great buy right now is Shopify. Again, Shopify, SHOP ticker symbol. Obviously, it's e-commerce on the back end. It deals with payments and I don't think Shopify is going anywhere. The PE ratio is sitting around a 15, which is great. Obviously, anything below a 20 price to earnings ratio is a steal. This stock has slid from $160 all the way down to roughly $40. I actually picked up some of this stock personally, I think about a week and a half, 2 weeks ago, around 38, 36. Again, this is not financial advice, this is financial education, but this stock is a good long-term buy in my opinion. And second up, I thought I would never say it, but Amazon is also a great buy right now given the current economic atmosphere. If you look at Amazon, obviously they deal with e-com, advertising, Twitch, Whole Foods, all those things. The PE ratio is still quite substantial, but that's because it's a big tech stock. It's sitting around 88 price to earnings ratio, but as you can see in this chart here, they are a pretty good buy as far as long-term asset. It dropped from $180 down to obviously 95, 96 bucks. So it's Amazon. There's not really much I need to dive into. It's a great buy overall, in my opinion. Next up, let's talk about cryptocurrency still. Now, if you look at this chart, I was sitting over at the airport at the BG Flight Center, and I wanted to look, okay, what is the market cap of these companies? Where are they all sitting at right now? It's been a while since I've dived into cryptocurrency, and this is just live coinwatch.com. You can go in there, kind of see the 90-day, 30-day, 24-hour, etc. But if you look at Bitcoin, there hasn't really been too much price. I mean, in the last 3 months or 90 days roughly, Bitcoin's gone up 12%, Ethereum's gone up 3%, XRP down 11%, never been a big fan. Our ADA or Cardano, I'm not a big fan of them anymore. I think they could have potential. There's not much utility. I actually made a video on that. But cryptocurrency's not really swinging too much. Obviously, we've had a lot of downturn in the markets. This is a great tool to utilize. There is still some good long-term buys in cryptocurrency. This is not a cryptocurrency dedicated video, but I just wanted to provide my insight on that. And then obviously the stock market, there has been big pain in the stock market, which I know, but you got to keep in mind that it's just a blimp on the chart. We have not really gone down quite substantially. The markets are already starting to bounce back, but I still think they're going to go down. A lot of it's going to be dependent on the Fed and how much they want to continue to raise interest rates. But it's imperative to keep in mind, obviously markets could still go down substantially, although there is good buys out in the markets. Now, what did I do for you guys? I went and I looked and I read Yardeni Research. Now, what Yardeni Research is they gather data from all of the Dow, the S&P 500, and they take large caps, mid caps, and small caps, and they do an average basis for the price to earnings ratio, which again is a good way to measure if things are overpriced or not. Now, if you look right here, it's going to tell us the forward PE ratios. And if you look for the large caps, they're sitting at about around an 18. Again, we were at around a 24, 25, so that's starting to go down. There is some better deals. Now, if you look at mid caps, again, it's sitting around, this is as of 125, it's sitting around 14 or 13-ish. So mid caps are an absolute steal. So far, it looks like large caps are still the most, I wouldn't say overvalued, but still the highest price valuation for the best dollar cost that you're going to get from buying an asset. And then look at small caps. Lord have mercy, small caps have gotten hit. I mean, I've been buying up a lot of small caps recently. There's a lot of great deals out there, and some of the stocks are ones that I've already covered. So if you want to go check those out, obviously we've done stocks that I'm buying now video. But again, look at that. Small caps are sitting around a 13.3. So, I mean, really, that's really the best deal as far as in the markets. But I'm really happy to see some of these forward PE ratios starting to go down. It's showing me that, finally things are starting to balance out. It's healthy. It is healthy for the markets to do that. Again, about every 8 to 10 years, you're going to see a correction. We're way past overdue that. So I'm excited to see finally, as far as long-term buys, some of these assets are starting to go down. I've been buying like crazy over the last coming months, but I'm also kind of saving and storing onto some liquidity as there's good deals in the marketplace in the foreseeable future, in my opinion. All right, brothers, that is the video for today. I hope you found value in it. Again, check us out on Discord, on Instagram, on Facebook, on TikTok. We're going to have more content coming. Leave a comment down below what you want to see. If you did not smash, please make sure to smash. It's very imperative. Again, I hope you enjoyed this video. Check out some of our other stuff on brotherhoodfinance.com. Make sure to go check out our products, any of that stuff if you want to support the Brotherhood, or if you want to become a member. We're going to have exclusive videos for our members coming up here soon. Anyways, I hope you found value. Again, thank you very much. We are back. Brotherhood Finance is back. Expect us to see us on a weekly basis. Much love as always. Peace, brothers.